Yes, let me begin by saying we have a 10% upside towards our MSCI China price target towards the year end. So that's our forecast. And indeed, if we take a step back from the current tech concern, the concern on macro data, etc., indeed, Chinese corporates, they have a very solid earnings. As we forecast for this year, we are looking at like 10% plus for on average for the constituents, in the MSCI China. So this is what driving the support on the China stocks in the near term, at least for the rest of this year. And then I think what we are navigating through the current macro and the tech sector, we also look beyond that, that the Chinese corporates are working very hard on shareholders' return. So taking away from the conference, indeed, many investors have already looked beyond that and focused on next year's. What can the Chinese stocks generate a better return for shareholders in order to drive share price outperformance?
We are keeping track of some of the economic data coming through from China today. We'll get the Caixin Services PMI in the next 10 minutes or so. The official reading, 49.1, that was a 6-month low. And I'm just seeing here that you're saying that slower economic growth may not translate to negative share performance. Can you tell us more?
Indeed. A lot of investors are overly concerned on property, consumption. I think consensus is gradually forming on that all this slowdown will last for longer. But having said that, corporate earnings, ROE, I think more importantly, ROE, which is what driving stock equity performance based on what we have published in our research recently, because we look at various markets globally, historically, high correlation with corporate ROE, but not countries' GDP. This is what we are looking at. And that is also why investors are doing a bottom-up approach, looking at what sort of corporates are actually going to weather through all these macro uncertainties.